Folks, we have a lot to go over in this video, from earnings to charts to numbers, my thoughts, the markets, all that good stuff. But before we actually do that, don't forget to get your free money for Moomoo, the sponsor of today's video, guys. Up to 16 stocks, each up to 2,000 bucks. Listen, all you have to do is go down below and open up your account, fund it with at least 100 bucks. You get 5 stocks right off the bat. And if you fund your account at least $1,000, you get 10 more stocks, totaling 15 stocks. And listen to this, guys, it gets even better if you fund your account at least $5,000 on top of those 15 stocks, which again, they're each up to 2,000 bucks. You also get a free share of either Tesla stock or Expedia stock, which right now Tesla's pushing 300. I think Expedia's at about 120 bucks a share. So this is a no-brainer. Use that link down below. And of course, that is an affiliate link, full disclosure. It helps out the channel. And with that being said, guys, cheers. Let's dive right into the video and break down these companies that reported earnings this morning, and then maybe later on we'll break down the overall markets, which right now at about 11:20, 11:30 a.m., they're looking pretty dang good. We have the Russell up 0.4%, the Nasdaq's up 0.3%, the S&P's up 0.3%, as well as the Dow's up about 0.4%, and we have the VIX, funny enough, also up around 1%, as the metals are all over the place. Looks like gold's down 0.1%, and we have silver up 0.3%. So before we dive into the markets, maybe later in the video, let's take a look at some of these companies that reported earnings today, and two that I'm looking at for later on in the day, which you guys probably know, the two big companies that are set to report earnings today after the bell. You guys probably know which two I'm talking about, right? So Goldman Sachs is number one that I want to go over, which is not one of the two that's after the bell today. This is one that reported earnings in the morning, and their stock right now is up around 1.5%. Really not doing much. I mean, look, we opened up at about, where did it open up at? 339. Then we saw a bit of a sell-off to 331. Then a big move, a decent move to about 345. We're talking about a 4.5% move. And now we're kind of just coasting at about 342 bucks per share. And you guys can see if I pull up the 5-day, 5-minute, we're holding a little uptrend, which is nice. And on the 4-hour chart, you're going to notice, wait a second, we're in a downtrend. Yes, you got that right, guys. We're still in a downtrend, even after the earnings this morning. That's setting the stock, up 1.6%, which, is what it's up right now. So Goldman Sachs, yes, it is above the moving averages, but we're still under 350. We're still under this, trend line that we see here, which is not the best sign for the bulls. So let me see what they did when it comes to their numbers. Looks like they did EPS of 308, which missed the 318 expected, so that's not good. And sales beat on the flip side, 10.89 billion versus 10.84 billion expected. So mixed bag there for Goldman Sachs. And it looks like here, anything on guidance, looks like revenue's down 8.2% year over year. That's a decent drop there. Looks like global banking and markets revenues down 14% in Q2 year over year. Headcount is down 2% versus Q1. So it looks like they're laying off, right? I'm assuming they're laying off a bunch of people there. And it looks like they posted $504 million in Q2 goodwill impairment related to consumer platforms. What does this say about their dividend here? I just saw it. They raised their dividend. All right, nice. If you're in this for the dividend, which I don't know how many of you out there own Goldman Sachs stock. I personally don't own it, full disclosure. But if you're in it for the dividend, that's awesome. And again, looking at the chart, guys, we're in a downtrend. We have to break above 350, which, it's possible. Maybe it breaks, but as of now, it is not doing that. The next one that I'm looking at is USB, also known as US Bancorp, which is up over 4% right now, and it's starting to break out to multi-month highs. Very good sign here for the bulls on USB, and it's been doing well over the past, couple of weeks / months. I mean, it bottomed out at about, what, 27 bucks in the beginning of May, and now we're at 38. It's been doing very well, in the past 2.5, 3 months, and now we're starting to break the highs from the end of March, being about $38. Very good sign technically here for the bulls. So let me see what is going on with their numbers. It looks like here they did adjusted EPS of $1.12, which came in line with the expectations, and sales came in at $7.17 billion, which beat the $7.15 billion expected. So inline EPS, pretty decent, right? Not bad, as they beat sales, which is always, that's always great. So we're loving that. And again, technically, yes, you could argue it's overbought, but then again, you could also say the bulls are still in charge. There's no sign of a pullback. You know, we're crushing it over the past couple of weeks. So it's kind of like a wait and see approach for me with this stock. I mean, I'm going to see if it clearly starts pushing above 38, 39, which it's not doing that yet, or is it going to start pulling back again, maybe to the mid-30s, which could end up being a decent dip, you know, an opportunity potentially. I'm not telling you guys what to do, of course, but that's kind of what I'm looking at, how I'm thinking. And full disclosure, right now, I do not own U.S. Bancorp, and I don't own any of the stocks that we're going to be talking about today, but of course, I'm looking at them as they're all, you know, they all reported earnings. Halliburton's another one, which is down now 2.5%. It's down at $37 per share right now, and they did, let's see here, EPS on an adjusted basis of 77 cents, which beat the 75 cents expected, and sales missed $5.8 billion versus $5.86 billion expected. So yeah, I mean, they beat EPS, missed on sales. Anything here on revenue looks like here, or guidance or anything like that, looks like they expect to generate free cash flow for full year 23 30 to 40% higher than last year, which I guess that's pretty good. And this is a stock that's been doing pretty well. Maybe not so much today. It's down 2.5%, like I said, but over the past couple of weeks, it is up from $27.80 to $37. That's 35% roughly. So it's been crushing it, and it looks like here, arguably, got a little bit too ahead of itself heading into earnings, and we're just selling off a little bit, kind of after double topping here. You guys can see on the 4 hours. So maybe in the mid-low 30s is where Halliburton, however the heck you want to say it, maybe that's where this could find support, potentially. We'll see, guys. We'll see. And overall, no doubt, it is reversing on the 4-hour chart. You know, we have an inverse head and shoulders, arguably. We're above the moving averages. We have a golden cross. This is looking really good. So that is Halliburton. I think it's Halliburton. I mean, I've heard this company. I've heard people say it so many times, and I still can't say it the right way. But Halliburton today, down a little bit, not the end of the world though. We also had the NASDAQ report earnings this morning. Let me pull that up for you guys. NDAQ is the ticker, and this is pretty much unchanged, down a little bit, 40 cents, nothing crazy, not the end of the world. And it looks like here they did adjusted EPS of 71 cents, which beat the 66 cents. All right, and they also beat on sales, $925 million versus $914 million expected. So not bad, double beat there. And it looks like here they announced quarterly dividend of 22 cents per share, which seems like it is higher than what it was a couple quarters ago when it was at 20 cents. So they're, you know, increasing that over time, which is great. But guys, which one thing that's not great, at least in my opinion here, is the fact that we're still in a downtrend. You guys see that here clearly. We're still on a downtrend. Let me draw a channel out to show you guys. It's probably better for the visual out there. Boom. You guys see that? We're still trading in this channel. In fact, with today's rejection, now we're getting hit under that 180 SMA, which is not the best sign at all here for the NASDAQ. So keep your eyes on it, guys. NDAQ is the ticker. And the last one for the video, which, by the way, if you guys stuck till the end, I appreciate you all as always. Hit that like button. Make sure to subscribe. It is free, and we're almost at 30,000 subscribers. And I was looking at my analytics yesterday, guys, and I was seeing the subscriber percentage. How many of you guys watching are actually subscribed? Guess what? 35% of you are subscribed. That means what? What's the math? 65% are not subscribed. So if you're in the 65%, come on, make sure to subscribe. I appreciate you guys as always. And yeah, Ally Financial, ALLY, is the last ticker for today, guys, which this one looks like it's about to break out. We just got an alert for ZM, which is Zoom. What the heck's going on with Zoom right now? That's also breaking out. Maybe we'll cover that in another video. But Ally Financial, this is seeming like it's starting to take the highs out from the middle of June, being about $29. Let me draw this resistance out so you guys can see. And we also have higher lows being made into that point, right? So this kind of looks like a triangle. Looks like it's starting to play out. And some key levels that I'm looking at on the upside here, really the main one is at $31. per share. You guys can see that was the high from the beginning of March right here. So if we do start playing out, you know, breaking out, that's where we could go. 31, maybe it goes up even higher than that. I don't know, but this looks pretty good technically. So that means their earnings must have been pretty solid. The stock's up 4%. So it looks like they did 96 cents in adjusted EPS, which beat the 92. That's good. And they missed on sales. Okay, seems like the stock doesn't give a crap though. But they missed on sales, $2.07 billion versus $2.09 billion expected. All right, so it looks like here, yeah, revenue's declining. Actually, I'm not sure if it's declining year over year, but it did miss the estimate, and the stock is still making a big move. So let's see if it could play in this window. Like I said, between 29 to about 31.50. That's where I'm watching Ally Financials. So with that being said, ladies and gentlemen, I'm going to wrap up the video. If you enjoyed it, hit the like button. And again, make sure to subscribe. It is free. And don't forget to get your free money for a Moomoo up to 16 stocks, each up to $2,000. They're the sponsor of this video. All you guys have to do is use that link down below, or just go to stasserfest.com/Moomoo. Simply open up your account and fund it with at least $100. You get 5 stocks right off the bat, and fund your account at least $1,000. You get 10 more stocks, totaling 15 stocks. And listen to this, guys. Fund your account at least $5,000. The best part of the promo, you also get a free share of either Tesla stock or Expedia stock on top of those 15 stocks you already got. So if you guys want some free money and you want to help out the channel, I appreciate you all as always. Feel free to use that link down below. And with that being said, cheers. I'll catch you all in the next video.